Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, September 25th, 2020. They say that history doesn't repeat, but markets often do, and at least the setup this morning seems a lot like the setup yesterday, where we sold off pre-open and on the open, and then the FANGs rallied because they do, and as we tape this now, the S&P and NASDAQ are up a decent amount. Not big, not recouping the week's losses, but which actually this week is shaping up to be the worst week since March. But we've had a lot of really good weeks since March, so I wouldn't freak out too much about that per se. And so, as I tweeted out yesterday, it was a bit of a snarky tweet. And I repeated on Bloomberg Radio last night because I'd sent it to the hosts, picked it up. And, yesterday's action was a simple equation: buy the dip plus vague hints of fiscal stimulus seem to outweigh the political risk of a contested election, or a coup, as I put it. So basically, equity markets always have been good at shutting out things that they don't feel like dealing with. The political risk is something that is out there, but ultimately markets don't know what to do with it, so they'd rather not focus on it right now. I was asked last night, how does the rising COVID rate in Europe affect the U.S. markets? And my answer there was, I didn't mean it to sound flip, but it was that U.S. markets are very good at ignoring things that go on in the rest of the world if it doesn't suit them either. So there we have it. As I'm taping this now, the reason I'm outside today, it's a beautiful day here in Connecticut. Hopefully you people are enjoying it. And, sometimes you sort of need to take a bit of a breather as far as markets go and reassess things. And this pullback we've had now has been a good way to reassess things, I think. And I've said this before, and I reiterate it here again, and that is with the pullback that we've had recently, with all the political and market gyrations that we're seeing. Much of it is healthy profit taking. Some of the other parts less benign, in terms of political fears or increased, potential tax increases, all that sort of stuff. If you've been relatively calm over the last couple of weeks as we've pulled back and said, this is part of, I'm okay, my risk level is fine, then your risk level probably is okay. You should be taking a look at risks always, but you're probably reasonably well set up because markets do pull back. Depending on your index, we haven't even had a real correction yet. So markets do tend to do this from time to time, and you have to be willing to withstand them. If you can't, you're over-risked, and you really need to pull back on risks. A reporter asked me recently, what's the best way to hedge one's risks in this kind of environment? And the simplest answer is raise cash. I know that sounds unpleasant. I know that's not necessarily the normal investment mantra. But realistically, if you feel that you are carrying too much risk and don't know what to do about it, the simplest thing is to raise cash. Does the return stink? Yes, it stinks. That's kind of the point. The Fed has made it more or less prohibitive for you to hold cash. It's relatively punitive. I'm not saying that you should move your portfolios to cash. I am saying that if you feel that it's too risky, that is the simplest step you can take. Another thought is, if we do end up with a blue wave, which might lead to a whole bunch of other political outcomes, but let's stick to the normal stuff. Vice President Biden has more or less indicated that he would like to reduce or eliminate the preferential treatment on capital gains taxes. If that comes to pass, I believe that will have a negative impact on the market because there are a lot of gains to be had right now with markets still near their all-time highs. And I do think people might feel incentivized to take some profits ahead of that. I believe that is the more of the reasons why we're seeing post-election volatility increases via the VIX, and I've written about them fairly extensively and talked about them extensively. I think that was actually the reason why November VIX futures crawled above October VIX futures, because the polls started to come in and indicate higher probabilities of both a Biden win and the Democrats recapturing the Senate. If that occurs, people might be incentivized to sell stocks ahead of a potential capital gains tax increase. That occurred before the passing of Justice Ginsburg. That occurred before the president's comments about not necessarily accepting the results of the election. What that led to was a greater increase in November VIX over October VIX, but that wasn't the original cause. Going forward, we're still going to have earnings season to deal with, and we'll start to focus on that over the next couple of weeks. In the meantime, also we're going to have quarter end. How dare I forget about that? That's next week. A lot of things to unpack, but as I said, it's a beautiful day here. I hope you're enjoying it, and hope you guys have appropriate risk levels for the portfolios that you're carrying. Have a great weekend, everybody. Bye-bye.